And good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 being recorded on Saturday, May the 4th, 2024. It again this week, I have to admit, it was still very, very interesting, but here's some good news. I do read my comments and I do read and try to respond to many of the comments that are left here on YouTube. And I think the biggest one is that people were getting tired of the double preferred counts. And I understand that because actually, as a trader, they were becoming very bothersome to me because it's like I wish the market would just make up its mind and just let us all know. And I think that that finally did come through, at least on a very short-term basis. And so I'm going to start here with the SPX. I'm going to start with the cash market and hopefully try to fill in some additional information that is going to help both option traders, equity traders, ETF traders, futures traders, help a little bit for everybody going forward. Now, again, being that this is the big picture update, my big picture has not changed. And I will continue to say what it is now does not affect the next several weeks. I mean, it does, but in terms of how I feel this is all happening, I do not believe that it's a new breakout. I believe that it is a finishing move. And all I've done is just flipped to the on the way I was calling it before, it would be the B version, which is the more bullish version that we have an opportunity still where the market could rise, go to new all-time highs, both the SPX and the futures market, and then finish this larger intermediate wave C, primary wave B. So if you remember, the other one that I was carrying side by side was that it was done, and that would have been at the April 19th highs, excuse me, previous, the end of March highs. Now, what did finish at the April 19th lows was minor wave 4. Now, bearing in mind what's coming off of minor wave 4 is going to be a minor fifth wave. I'm already beginning to signify that it's likely going to be a diagonal triangle. That's going to make the most sense because we've got to wedge and it's got to go quick. It has to start to move without holding on too much. So here we are, the A, the B. These are all within primary B. Intermediate A, intermediate B, we're inside intermediate wave C. We have 5 waves of minor degree. 1, 2, 3, 4. So let's just open it up, bring it down to the 4-hour chart. Here we are labeling it ABC, putting the 4 underneath. Okay, initially, we're going to add on the cash basis. Now, did it actually break above this, which I had initially labeled wave 1? No, it hasn't. Did it break above here? Not quite. Futures market, yes. Cash market, no. Now, you would think with those beautiful earnings, the futures market caught it all the way here. The cash market didn't, but it gapped. So you'll notice we get gaps in a lot of places during earnings season. And here we are again. Now, 1 ABC, signifying that it is likely going to be a diagonal. Still can't say with certainty, other than if I'm going to count this as A, B, C for a minor wave 5, then I got to get it all inside of it. It has to be 1, 2, 3, 4, 5. But all the internals are 3s. So this is a 3. Whereas this one and this one, right? Here's the other one. When you're in expanding, that waves 1, 3, and 5 will be 3-wave patterns themselves, but within them, the A and the C will be 5. So it's a 5, 3, 5. This is 5, 3, 5. Then we get 5, 3, 5 as a wave 2, which it didn't need to be, but I think that's pretty much how it ended up coming in. But that was the reaction to the Fed. and then the reaction to the Fed. Then we got into Apple's earnings, and they started to buy the stock up, and then they did, and that's where it happened right in here. And then we got that little bit of follow through, and that was, now we're waiting. Now, I'm going to try to keep this technical because there are things, and again, I'm going to just say all of the geopolitical situations, all of the fundamental situations, which include interest rates and numbers and figures that come out between now and a top or the next Fed meeting or the next expiration, they can provide enough surprise to pull this market to a high and then just sink it. Now, I still believe that the initial drop, it's going to come as a shock. The market's going to be shocked because whatever is going to happen, they're not necessarily expecting it to happen. Thus, the shock. So, on this upward move, what I have put back on is the top at 1.382. It's a fib number, and I'm going to show you very quickly where that comes from. And that's this. So I'm measuring that initial decline, and then I am running Fibonacci that go along with being that this could be an irregular B wave. And we've yet to reach 1.382, which is the fib that goes along with that. So again, coming back down to my 4-hour, pulling it open, that line sits at 53.12. Now, if we went to 53.12, well, most certainly it's going above that high at 52.65. That's the high, the all-time high thus far. But it's also wave 3. There's wave 4. 1, 2, 3, 4, 5. Can get into here. We're starting to build a little bit of a group, a cluster of resistance. Is there moves above it? Yes, your next cluster sits at 54.50. Now that begins to build a probable or a possible path. Technically, we've got 2, a third and a fifth, grouping together here. Now, if first inside this third, this move would be equal to this move at 51.81. This is the basis, the cash. I would be expecting more because, of course, it's a third wave, and I'm looking for an ABC. All right, so right now it looks like I don't know, maybe we come down a little, come back up, and then maybe hit that. That could work, but I would expect it to go in between the two. And I don't have any points yet where I can connect more to fill in these gaps of where resistance may be found. So right now, I have 51.81 and then 52.60. And that corresponds with the minor fifth wave. Now, 52.59 does not necessarily get us above 52.65, but close enough where if it went above, created, or even if it didn't, it could fail, but then this has to be 1, 2, 3, 4, 5. Cannot just be A, B, C. It could, but then this one would go up here. That I will tell you as well. If it went up here and we just started to come back down, then we're in a much larger, and this would be the more likely area that the market's going to come into. Now, time-wise, let me just say that looking at the S&P on a cycle basis, we have 6 weeks that it came in the last of April and the beginning of May. That's now. And so what that would suggest is that we have that momentum move to the upside as these cycles begin their up sequence. So we have different also late May, early June, we've got cycles that kind of can come through as well. So possibly the we haven't totally bottomed yet. So the weekly is kind of showing that. But if I go down and I look at the daily's got a little bit different, where we actually come in the end of May. So we've got a little bit going on between our weeklies and our dailies. So right now we are in the up phase, and that would go to next week. We're looking like the 13th, 14th, 15th, maybe it goes all the way to the 17th, and then we start to swing lower. So could we reach the high by sometime next week? We could. We really could. And then NVIDIA, I'm just posturing here. Sorry. On what if? And that's not technical, but again, what we have left is NVIDIA's earnings on the 22nd of May, and they're not ready to give that up. So Apple's okay. Well, okay, so maybe that means NVIDIA's going to come out swinging. We don't know. Nobody knows. And here we have the next cycle low on the dailies is coming in the end of May. And that fits everything, coming back down. But that would mean that we top towards next week, end of next week, and then we start to turn lower. And then the longer term. So in other words, the 3-month is reached its peak right on time and has already started to turn lower. So it'll really start to put strong pressure on about the 20th. And that's 2 days prior. And then it just kind of races down to get into a low at the end of May. Now that's the cycle basis. So going back to here, I mean, this is the 4-hour. If I take it out to the daily chart and we open it up, we're looking as if we can finish somewhere here. Could we get up to there by the 20th? By the 17th, actually, because that's the May expiration. I believe it's the 17th. Could we? Yeah, we could. That's 2 weeks. 6 weeks and the week after. So by the 3rd week, sure. And it would be fast. And then maybe we start and it gets pulled lower. Now, again, what if we don't and end up sitting here and then having it happen, you guys are going to hate me, but it goes back to the other, which is now the alternate. And that would be that we're done and we're dropping in a strange but have to be acceptable pattern to put in minor wave 1. But right now I'm focusing on this one. Okay, so we still have, here are our levels. We're coming up we're in minute wave 3, 51.81 to 52.60. I'm sure there are points in between. We can put them over here. 5200, 5211. I believe there's a call wall at 5200. So again, just using those, nothing more than if they break, it should be resistance. If they bust through the resistance, then you're going to see a scramble because positions need to be hedged. Positions need to be adjusted. And it could create a flurry and get us very quickly up into here and very quickly above there, and all before the cycle starts to press hard lower into the beginning of June. Okay. Over in the ES, our favorite little beast. Well, actually, the Nasdaq's my favorite little beast. Same deal, all the way up. There's 3, here's 4. We're coming up. So you can see it a little bit cleaner because we don't have the gaps. And so I'm thinking, 1, 2, and we're up into that 3rd wave, and it should, number 1, break above this trend line, which if we take it out a couple of days, comes in at about 51.28, 51.30. And no, that's actually much higher. That's coming in around 51.80 if I push it out here. And then we would clear the path to get up to 52.27, which is where 3 would be equal to 1. I'm always going to be looking for more. But it could be enough to get us up, peak, come back up, and get in. Now, same deal between the two, right? 3 would be 1.618 times the length of wave 1, and that's up at 53.44. Well, here we would be breaking to new all-time highs up here. And they can do that in wave 3, come down into 4 and come back into 5 and not make it much past 53.64, which again is just 618. Not first up in the minor degree. Minor degree first up would be way up here. And that would say that we get a very strange translation on the cycles if they were to kind of point to coming in down there, and the low would be way above. A lot of things could be pointing in different directions. Back to the future. What I'd be looking for right now is a follow through. 2, they start building towards the May 17th expiration, which is going to be a week from next Friday. So what could happen? I think we continue to see follow through on Apple, or they continue to build it via just options flows, via that we start to see again the volatility play coming in, where they're selling the VIX and they're buying the underlying volatility. That's always they move collectively as a big group, and that would also depend on the flows that we're seeing in the myriad, and I mean myriad in a good way, but just in the size of the variable products that are available to trade that are pulling in big money. They pull in huge amounts of money, and they have to do with volatility, and they have to do with volatility on the Mag 7, volatility on all types of different products. And so there's just more things to kind of try to put together to determine what's creating the move. And it gets a little bit out of hand, I will be honest with you. But they do affect our market. So at best, I follow pretty tightly. And I will always be looking for signs of rejection, signs of whatever, something else is happening. And if we get the follow through on that and they break through certain levels, call wall, put wall, volatility triggers, we see sudden changes in the VIX, then, we're going to see, it'll be reflected back over here. Right now, though, I think we get up to at least 52.27 basis the June contract. We correct a little bit, and then we start heading up again. A, B, C, 3. And eventually we do end up here. And I do believe the third wave will get us at least in the ES to new highs. And then we're done, and we come down into 4, and then we go back up. And again, looking at that. A lot of this will get filled in once I get 3 and 4, because then I can connect 1 to 4, and then we'll be filling in all this because these come down. Depending on how high, and then where the 4 comes in, how high and where the 4 comes in, if it does. And then this will switch, and we'll be able to see more of the pattern on what depth, what's that angle? Right now, the angle's this way, but trust me, if this comes in 3 here, then this angle goes to there. And you can see what happens to it. And if the 4 comes in here, then again, you see what the angle. And we start pointing it. Where's the, say, for example, the 4 brings it down to here. It's still expanding. You can see it. It's expanding, but it opens up where a lot can happen. Now, those are just hypotheticals, right? Because right now it's right, that's where they are. They are what they are. But no. Activate, thank you. Bring it back down here so we can get it right. Okay, so that's the whole S&P. Now, next week, let's try and take a look at what is coming out in terms of numbers. And let me just kind of get that up there real quick. And so I can get, yeah, I got so many pages open. It's like sometimes it takes a while for it to get over there like it is right now. I was going to go over what's coming out next week in terms of economic numbers. Let's go to the calendar. And nothing on Monday, consumer credit on Tuesday, although our Fed personnel, presidents and govs, are out all talking. Wednesday, we have wholesale inventory and a bunch of Fed people talking. Thursday, initial jobless claims, Fed person talking. Friday, all Fed. U.S. federal budget comes out. So basically next week, nothing really important. The following week, we get PPI and CPI, plus, plus, plus. So that could be, you know, our week to kind of have nothing important and just push higher. All right, that's going to be it for this week's S&P update. The next Elliott Wave update will be on Monday, May the 6th. Have a great balance of the weekend.